Good morning, fellow option traders. This is Jeff, and welcome to the daily scan for 4/15/2013. Today is Monday. Let's take a look first at what's on tap from announcement perspective. We have the Empire State Manufacturing Survey. I believe, I don't know, that's some sort of survey that's done by somebody in New York, I guess. Treasury International Capital and Housing Market Index. Now, speaking of housing, briefly, I have read lately and actually seen it on TV, and a realtor friend of mine are all saying that housing hasn't never really hit the bottom, and then it's in a mini bubble right now. So I don't want to freak anybody out that may be selling or buying, because I just don't want to do that. But if they look at what they were doing, was looking at the price of housing versus income, and we all know that income has been pretty stagnant for the most part for most people, and that the housing prices never really got down. I believe, like, if your mortgage or the price of your house should be 2 to 2.5 times your annual income, and it is now at 3. So they say that it's still too high and that it's still in a mini bubble. But I'm not going to worry about that for right now. I think we have something else that we should take a look at, and is definitely troubling. Well, first of all, we're set to open lower today, but down here, gold futures is what is really scaring me right now, and I don't understand it. Let's take a look at a chart. Now, that is one ugly chart. Look at this. Last 2 days, Friday and today. Yes, it's been in a downtrend, but this is pretty horrific, if you ask me. If we were to go back, let's see where we are at right now. Let's go back 10 years on a weekly. We are now down to 2011 levels, and actually kind of building steam, because to be this far down at this time of the day, and this is a weekly chart here, so this is all of last week, and this is just Monday of this week, if we want to zoom in on that. So all of last week and one day this week. A little frightening to me anyway. It's just a little bit frightening. Okay, so that's gold. Of course, silver kind of tracks along with it, and it's way down too. Now, the reason that I have heard is that people are selling, or entities are selling their gold to get into the stock market. Now, there's a couple things you could say about that, and that is that first thing to say is, here's the S&P 500, is that when everybody starts piling into the market, that's when it does a correction. You know, it might be a little bit of a surge initially, but that's when you can expect the correction, when everybody says, oh yeah, it's great, let's get in, and then the bottom falls out. It almost always happens that way. And the second thing is people don't drive futures prices like that. Countries and large banks drive prices like that. So what's going on? Are they dumping their gold? Or are somebody artificially suppressing the price of gold to corner it sometime in the future? Oh man, it's not a pleasant thought. Alright, let's take a look at our accounts here. IWM over the weekend, my calendar, the shorts expired. Totally worthless, of course. So now we're going to be looking at what we're going to do about this. Can we add to it? Well, we might, but I think what I'm going to do is to save a little bit of face here, and we'll go to the Analyze tab on IWM and take a look at this. I think what I'm going to do is I am going to sell this 87 put. If I just click right here, I can see that I paid $1.98 for it, and I should be able to maybe get 98 or maybe a little bit more for it today if IWM pulls back some. The other thing that, if things reverse, well, first of all, I would probably sell this. The next thing that I would do is take a look at maybe turning this back into a calendar, the 91 put. So that would mean that it's a June 4 expiration, which is a quarterly, and that is right here. It's quarterly, so we could go with a regular June expiration at 91, and we could get $1.79 for it. So let's take a look at what would happen if I went ahead and sold two of those. Oops. And then uncheck this 87 and take a look at our risk profile. And here we have a calendar that could possibly bring us back to only a loss of 139 if we land someplace in this area. Well, 139 if you hit 91 right on the head at expiration. So what are the chances of that? But right now we'd be at 272 for a loss versus 266. Well, that's not right either. Here's what I have to do in order to make this look totally correct. Alright, so we would be, right now we're at 478, and if I don't do this, we're at 465. It's kind of a wash. I don't know whether I would really do it or not. What I do want to do, though, is I definitely am going to sell this one. You can see that I end up at negative 472 versus a possible 852 if I look at the red line. Let me take that off of there. Alright, so I could lose 1,000 here, and if I go ahead and sell that 87, then I end up at 852. And if I go and sell that, then I end up at 478. My max loss would be 506. That's what I'm trying to say here. So the max loss would be 506, so that's probably what I will be doing. And just to minimize the maximum loss, let me show that again. Alright, so here's where we are today. Max loss $1,000 if it doesn't move down. Alright, so if I sell my 87, my max loss goes down to 852, which is about right. That's $2, so that would be $200 drop in the max loss. And then if I sell this one, I get 173, so that's roughly around $300. So I would go from a max loss of 852 to a max loss of 505. So that's working out about right. Now, do I want to commit myself to that max loss? I don't have to do that right now. I'm just going to observe. First things first, unload this 87 because the probability of it getting all the way down here is pretty darn slim. if I go to the June expiration, which is the quarterlies, is there. So that would put me, this is one standard deviation here, and the probability of it moving down to the 87 is about 20% actually of expiring at the money. So that's probably what I'm going to do, unless things really get ugly today. Then I'll just hang on to these things. And things are lining up to be pretty ugly, because when I first looked at this, it was down 45 and it's now down 55. Okay, so rest of the account. Okay, Baidu is in the money right now. I want to take a look at a chart on that. And let's go to our swing chart here. Okay, you know what I saw here, this little thing that flashed up here, I want to just point this out too. All you need to do is click on this green circle. If you've been seeing it, you can see what your alerts have been. And it says I have 592 drawings within this chart. I get that all the time, and I keep clearing this stuff out. So what I have to do is right click, go down here to drawings, and say delete 475 drawings older than 1 month. And I'll do that. You know, they start to accumulate after a while, and it really does kind of slow down your charts. So as much as I've been blaming Thinkorswim, some of it may be my fault too. Now it's disappeared, so we can, oops, I'm not going to send a report right now, so we can take a look at this one, and it's just, all this is telling me, because we have a weekly chart, it just says you want to see expiration lines, but you can't see them on a weekly chart. It's okay, that's fine with me. So I say, don't notify me about that. I know that. Okay. Baidu is in the money. Well, what's going to happen here? Don't know. It looked like it might open down below our short at 90. So for today, nothing. Okay. Not doing anything on Baidu. I will keep an eye on it, I promise. Everything else, Chipotle, this is a, take a look at the chart on that. So one of the things, and these are some big moves here, but it hasn't triggered my alert yet, which I put here on Friday, I think. These are some big moves. We'll just keep an eye on it, but this is what happens when you have one of these 510 iron condors. And if you look at it with a risk profile, when it moves like this, and you're following the white line, if it moves off a center and your deltas starting to get screwed up, and it's kind of hot on the delta side here, that's when you get what appears to be these huge losses. So again, we have the alert set on this. We're just going to keep an eye on it, and we won't freak out about that one at this point. Maybe later, but not now. And this Russell, this is calendar, and I want it in the money. I will just take a quick peek at that one. And as long as it's in the money someplace, we're doing good. So we're happy about that one. All right, and then I had a fellow option trader by the name of Bob talk to me about going negative theta instead of positive theta. In other words, being what amounts to be, and some people call it a net seller of options in a rising market. And there is some credit to that. and it involves buying at the money, narrow spread iron condors. And the return and the risk and everything else is very similar to the 510 iron condor. And I will be covering it separately, probably in a post and a video. So watch for that in the coming week. All right, let's go to the A+ list. Enough chattering. Gold's down 107. It's just sinking, sinking, sinking. Okay, first one, Apple. We'll just do these quickly. We're not learning anymore. Oh, we have a trigger here on Apple. Okay, let's do an alert. At or below. Come on. There we go. Okay, we're going to watch for a trigger on that, and I'll make a note here. Alright. So we have a downtrend. We have a break below this low. We have stochastic bending down. We have MACD bending down. We have sort of a confirmation over here on the long term, but not in the MACD. And the reason why the MACD is kind of like creeping up here a little bit is because of this what appears to be some sort of consolidation going on here. But this is good enough for us, and we'll probably be looking for something above this high here. Oh, we have earnings coming up. I don't know. I don't know if we're going to do anything. I have to think about that. I really do. And I will. Maybe we'll do something for this week. Let's just take a look right quick to see if there is anything here for this week. 4 days left to this expiration, and we want it to be, we're looking at 440. Oh, there's a good premium in that. Yeah, that's doable. 440 for this week. Yeah, I'm going to go do that. It's 440 back. BEC for bear, my abbreviation for bear call. Picked it up from a fellow option trader in Australia. That's what his club calls it, BEX and BUPS for bull puts. And that's all they do. And I really enjoy hearing from them. Okay, and I haven't in a while, so if you guys are listening, let me know how you're doing. All right, Amazon. This is the one that I could have held on to that long call another day, but I didn't. I got out of it early here. I didn't like the way it was moving. But anyway, is there anything going on here right now? Well, we have the start of a new trend here. Let me back out of this. Well, it looks better here. So I'm going to take this off. And we still have, are we still in this iron condor? Yeah, we are. And we're doing okay. All right. Nothing here. I want to delete this one so I don't have too many drawings here. And I'll try to clean this thing up later today. Baidu. We're in and we're keeping an eye on it. We're in a downtrend here. We may get a trigger. I don't know. We just have to keep an eye on that. CF Industries. Yeah, it made a big move, and we're already out of this end of this iron condor, which is why I took this off of here. That's where we were. I'm glad we got out when we did. Chipotle. Okay, this is the shaky one that we reviewed before. no entries on this one at this time. See, I'm not seeing, let's see here, price axis, fit studies. Well, if I do that, what does that do for me? Doesn't do anything. Fit, how about fit high low? So I'm not seeing the moving averages. I don't necessarily like that either. I'm not sure what I do here. I'll go back. I want to be able to see these moving averages, especially the 50. Not seeing it here. I have to figure out why I'm not seeing the 50 on this particular chart. Salesforce, they have their stock split coming up, looks like this week. We'll see how that works out. Actually, GLD probably wouldn't hurt to just buy a put on the dang thing for right now or something. I don't know. I'm not going to play anything on that myself, I don't think. But you never know. Google, we have a pretend 510 iron condor on this, which is these gold lines here, or yellow lines. And we had this April here that we dumped a while back, so I'm going to delete that drawing. MasterCard. Oh, I forgot to look to see if there's anything coming up here. Let's go back there. Go back there. Okay, anything. No, we have an uptrend. We're high there, so nothing there. MasterCard. Oh, we have April Iron Condor. We should be okay with that. Everything's looking cool. We're in an uptrend here. And we are up here on stochastic, so no entries there. Netflix. I was thinking about this April here, back there, would have worked out. Okay, so we're too flat here. We have no trend and no directional bias or no directional indication here. We have price line, and we have an April on that. And where are we at? We're at, looks like 5 cents, 15 and 20. So there is a 5-cent difference here, or because I got two of them, $10. I could get out for it. Being $10 of max profit, but expirations this week, it's miles away. Not going to worry about it. Of course, you know what I'm going to do? Just to make sure, I am going to put an alert on this, because it's looking ugly today. So, at or below. And then the last of the two P's, Panera Bread. And we got out of this Iron Condor here a while back as well. We are in a uptrend, bending up really nicely. I like that. Looking for a pullback for an entry opportunity. But we have earnings coming up. Looks like next week. So we'll keep an eye on that. All right, ladies and gentlemen, that's it for today. Thank you very much for watching, and have a great day.